We are truly an export nation, and we are a food basket in many ways.
So how do you serve your trading.com clients, your people, in terms of keeping on top of the market? And maybe how do you keep on top of the market as a CEO? How do you see the markets, energy markets in Australia, quite different, or they are same across all the states?
So Australia, I think, has we're addicted to energy.
The volatility in power markets in Australia is probably highest in the world.
We're a retail-focused business. We're only retail. So traders look for they're putting their own money at risk.
What three things would you say somebody, Peter, who's starting the careers, who want to venture into this trading world?
I think you've got to have a passion. Mm-hmm. First thing in life is you've got to because you work for a long period of your life. You've got to find something that makes you want to go. But he said, you never go broke taking a profit. I've never forgotten that line.
Why would somebody want to become an analyst, become a trader? What would you say to inspire someone who is getting into university?
XAnalysts. Empowering analysts, transforming markets.
Hello everyone. Welcome to Exploring the Energy Markets podcast series. I'm Mukesh Sahdev with XAnalysts. The purpose of the podcast is to distill the insights, the experience, the knowledge from the energy markets experts across the globe. Also, the ambition of the podcast is to enable high quality analysis among the future analysts by sharing knowledge, experiences based on hard facts, hard data, and equally creative original thinking. My guest today is Peter McGuire, CEO of Trading.com Australia. Peter is a well-renowned market strategist, trading executive, and a very familiar face in the media, sharing his sharp insights and knowledge. BBC, Bloomberg, CNBC, you name it, and Peter is on. Peter has also done Executive MBA at University of Technology, Sydney, Commercial and Risk Management from University of New South Wales, and an Advanced Management Program at Wharton School of Business. Good day, Peter. Welcome. So excited to have you today here. It's a pleasure. And thanks, Shreya, for getting us started. A lot of things to talk about. Exploring the energy markets, that's the theme, Peter. So tell me a little bit about what keeps you busy these days. And I know, there's a brand change from XM to Trading.com.
Yes.
Let's hear it from you. What's the new thing?
Well, thank you very much for the invitation, Mukesh. It's very nice to join you. And I think the markets are dynamic. And certainly we've had a lovely friendship over the last few years. And we've traveled the world, and I've ran into you at different parts. Trading.com, we looked at a name change and a brand change from our established brand, our sister company, XM.com. And that was rolled out into Australia, UK, Eurozone, and America, United States, America. So it's where we are, and it's our established energy to move forward and really galvanise. And I look after the Australian market. It's a very small part of our business, but it's a very important part as well. So that's the reason why XM and now Trading.com are established.
So in terms of, you mentioned Australia's small market, right?
Yes.
I guess Australia's exports account for, I was reading, about 20% of Australia's GDP, and Australia exports a lot of raw commodities from here, right?
Absolutely.
So maybe to start off, tell me a little bit about how the Australian energy markets and in general the markets have evolved since you've been watching the markets.
Well, I think we've got to look at, naturally, if you look at LNG, you look at certainly coal and fossil fuels, and we export a lot of our energy to the likes of Japan and China, just for an instance. And it's a very competitive market, but you've got, fuel burning power plants. you've got LNG, and naturally that powers power plants as well. And then you've got the overall appetite of the world wanting not only our energy, but also our agriculture, seafood. We are truly an export nation, and we are a food basket in many ways. In the 60s and the 50s, they used to say that famous saying, we were off the sheep's back. In other words, we exported sheep, it was wool, and that was the Sydney Futures Exchange. That was one of their very important contracts. Now it's changed to the point of different, as far as energy and so on. I mean, have a look at what we do. Pearls, gold, diamonds, you name it, uranium, you name it, we've got it. It's a very rich nation.
No, fantastic. And I would say that I've been 4 years here and watching the market. I certainly see that there is a big shift. And I wanted to ask you, with all the volatile markets these days, which are driven by a lot of headlines, right?
Sure.
So how do you serve your trading.com clients, your people, in terms of keeping on top of the market? And maybe how do you keep on top of the market as a CEO?
Okay. I think now it's very much, first off, we've got to be very appreciative that the financial markets are 24/5. So the market doesn't sleep. If you're looking at crypto, it's 24/7. So you think to yourself, when does the market have a hiatus, or when does it have a break? Well, it doesn't. So there's the first part. You're looking at fundamental analysis. So the news items and what's driving, could it be geopolitics? Could it be weather? Could it be supply disruptions? Could it be a decision from OPEC? Could it be 20 different, unfortunately, it could be a war premium.
Yeah.
So there's that side of it. So one needs to be conscious of those inputs. Also, the religious festivals and Christmas, and all through the calendar year, different impacts at different times, and with weather can really change the fundamentals of the energy market.
No, I think you're right. Weather has probably become a big factor in the whole energy market space. And what I wanted to go a little bit, Australia is a big country.
Massive.
From almost like a continent, from Perth side to this side. How do you see the markets, energy markets in Australia, quite different, or they are same across all the states?
Well, I think primarily, you've got to look at the distance, and that's for all the viewers. I think it's about a 5-hour flight, Sydney to Perth, and it's pretty much a straight line. It's 4,000 kilometres. So when you get some idea, that's London to Baghdad.
Wow, okay.
So it's just immense.
Yeah.
And we've only got 26 million people. You go to Greater Tokyo and you've got 34 million. You go to some of these, you only got to go to Mumbai and you've probably got 22, 23 million. And so just the population really, and it's all on the seaboard, there aren't a lot of people when you fly across that you don't see many people. You don't see much at all other than desert. But all underneath that desert is naturally energy and base metals and all forms of, from diamonds to, uranium, you name it, it's there. So Australia, I think, we're addicted to energy because we like air conditioning. Because it gets hot here, remember. It gets cold as well, so you want heating. And we have, I think, a very first-class world. It's a safe environment, and it's a wonderful country to live in. So being a first world country, that requires naturally a lot of resources to get the consumption patterns going, protein-rich diet, and general wellness across the nation.
Okay. I also was reading recently that given the penetration of the renewables along with the traditional fossil fuels,
yes,
the volatility in power markets in Australia is probably highest in the world.
Wow.
So I would want to hear your take. People who want to trade Australian markets, right? How they should be thinking about, what they should be looking at, and are there any pointers you would want to tell those from outside and they want to trade the Australian market?
Well, I think you've got to look at the fundamentals. That's where it starts and stops. And you've got to look at behaviours, and you've got to see what government is prepared to do with renewables and the green way of life. You've got to think and be conscious of it from wind and solar. We've got plenty of solar because we've got plenty of sun. We've got plenty of wind because we're on the coast, a big nation, so there's no shortage of wind. And so those new age energies, and then be conscious as far as from a coal market, and then look at the overall theme. Where do you see opportunity? And that's what trading's all about, because the markets you trade are very much reliant on opportunity. That's why you do it. You're either hedging or you're taking opportunity, being a speculator. And so we're a retail focused business. We're only retail. So traders look for they're putting their own money at risk, and their risk profile is they've got to be very conscious that they don't want to minimize their risk and maximize the opportunity.
Well, I think that leads to me to the next question. You're right. Trading is about risk management. Yes. And risk relates to, in my view, building strength, building skills, building competences,
Absolutely.
How you look at the market. So maybe any personal stories, Peter, in your journey. There is an analyst inside you, where you started to now. What personal stories to share as an analyst you found through the journey?
I've had the good fortune of having good teams of people around me. So like in any analyst role, if it's a combined team, then some people in that team could be soft commodity focused, agriculture and so on. Some may be energy, some may be precious metal. And then others have a different viewpoint as far as they might be stock related. So they're companies that, gold miners and so on. So when we look at the markets, you've got to know what your what you're trying to achieve, because that's the marketplace. And you've got to look at global fundamentals. You've got to look at demand and supply. You've got to look at supply disruptions. You've got to see whether companies have had or industries. If I take silver, for example, it has had a very much underinvestment over the last few decades. So what's that going to represent over the next 3 to 5 years? People are saying you're going to see massive uptick as far as precious metals. So that could be well the case.
Okay.
So you've got to know, and so those long-term viewpoints, what happens, and be conscious of the news, geopolitics. I remember trading in the 80s in crude oil at the NYMEX and in New York. You've closing positions out. You've got so many moving parts that you've got to really be appreciative of what's going on in the marketplace, from tankers being hit in the Strait of Hormuz to supply disruptions to war. All of those factors greatly impact, and especially the energy markets.
Well, the markets are very complex, as you rightly mentioned, and you need to watch a lot. Now, we live in the age of AI. There is a lot of data, there is a lot of information available. But I also believe that the traders or the analysts need to focus, and that's my passion as with XAnalysts, is to explore those granular competencies. What 3 things would you say somebody, Peter, who's starting the careers, who want to venture into this trading world, and you say, well, unless you have done these 3 things, you shouldn't think about it. What's a hard message you might want to give?
I think it can be broken up in a couple of ways, Mukesh. It can be broken up with, we're talking to an 18-year-old that's just finished the high school certificate exams in Australia today. And they're waiting for the results, and they'll get the results probably in the next 5 weeks, say, maybe by Christmas. I'm not exactly sure, but let's assume they do. And so there's going to be a point in time, and they might be watching this show, and they say, I've never thought about doing agricultural economics and at Sydney Uni, or I've never thought about doing a commerce degree or an economics degree because I just don't know much about it. Or I had an uncle that worked in a fly-in, fly-out mine, and he was in the energy space. So that could be, I'm interested in that part of it. So I think you've got to have a passion. First thing in life is you've got to because you work for a long period of your life, you've got to find something that makes you want to go, wow, I can't wait to get started today. So it's got to be passion. Once you've identified the passion, And that's if you do want to be in commodity markets. And I think they're extremely, I'm very fortunate because I'm passionate about them. I'm passionate about mining. I'm passionate about agriculture. I'm passionate about cattle. I'm passionate from a farming perspective. I'm passionate when it looks at geopolitics. I'm really on the edge of my seat because I find it stimulating and interesting. Commodities, like, I've had the good fortune of spending time with Jim Rogers up in Hong Kong, and, it's very much very much a part of everyday life are commodities. That's what we live and we use daily. So if I get back to it, you've got to have passion. You've got to identify that you want to be in this and you want to do it. And then you've got to really see, what vehicle can get you to the point of, are you going to work for someone and then you're going to be an analyst internally? Or are you going to put your own funds at risk and trade and say, I don't really I'm happy being a surveyor, or I'm happy working in a hospital, or I'm happy doing whatever, but I can trade the markets as at the start, I said it's 24/5. The market doesn't sleep. Gordon Gekko said, didn't he? Market doesn't sleep.
Yeah.
So you can really allow yourself that opportunity to say, I'm going to educate myself. I've got passion. I'm going to get educated on technical analysis, of which a company like ours offers wonderful training, all complimentary. And so I'm building up my core competencies. And then I'm thinking, do I put money at risk? Do I say, yes, I want to be a part of those markets. I want to participate in trading. And it's a role, Mukesh, that really is very flexible. Someone might say, no, I want to trade New York, but I want to live in Tokyo, or I want to live in Sydney. Well, I've got some good news and some bad news.
Okay, what's the good news?
Good news is it's very vibrant and it's exciting and it's deep liquidity. Bad news is it starts at 10 o'clock or 11 o'clock at night, and it runs till 7 o'clock in the morning. So you've got to say, well, I'm going to sleep during the day and I'm going to do that at night. Plenty of people do. So it depends on where you want to live. What markets do you want to participate in? Do you want to be participating in India time zone and UAE, or do you want to be participating in, Sao Paulo?
Well, I think that's so fascinating, Peter, as you mentioned that the opportunities with the 24/7 are there. Of course, it comes with a challenge. And you also mentioned that don't look at agriculture and other things just from a pure technical perspective. Add on the market layer, and then these could be highly rewarding careers. And you also mentioned that you can be as an analyst or a trader, or you can do whatever you want and still trade the market. So
plenty of people are professionals and they don't have anything to do with the markets other than trade them. I think a lot of traders, they absolutely love the experience of the markets.
So, that's my passion as well, to bring the joy and the enthusiasm for getting into the trading markets. What I wanted to ask you is that somebody who is trying to get there, they look at technical analysis, they look at fundamental analysis. How would you simplify to someone in your language, this is technical analysis, this is fundamental analysis?
Okay. Well, I want to throw in there also, we made a reference as far as seasonality, as far as summers, winters, religious festivals, Christmas, Easter, the Muslim year, as far as what goes on with Ramadan. These factors need to be brought in to your analysis. Technical analysis is moving averages, stochastics, relative strength index, Bollinger Bands, you name it. There are probably 100 different tools you wanted that you can use. That might be an exaggeration, but it might be more. I don't know. But there's a lot of tools that one can use from a technical trader perspective. Fundamental analysis, and we've covered seasonality. Fundamental analysis is what's happening with. Let's look at inflation. I'll give you an example. This time last week, since this time last week to right now, the government shutdown in the United States is back on. So they've stopped the shutdown and they're back into business. So there's three things that we need to be conscious of because we're 17th of November. Where are we in mid-February, mid-December from a rate cut perspective with the Fed chair?
Okay.
So we've got CPI, inflation data and unemployment for September. We may get that drop later this week. We may. But we believe there's not going to be any numbers for October.
Because the government was shut down.
Correct.
Mm-hmm.
So last week there was the swap traders looked at a 72% probability of a 25 basis point cut by the Fed next month. Now that's compressed in a week to under 50%. So they're saying, and Fed Chair Powell said, it's like driving through a fog because he hasn't got the data. So he's covered with, he's only got that much visibility. You don't want to drive because it's damn dangerous in fog. So you say, what is he going to do from a rate cut perspective? And then you think, well, inflation's creeping up, but unemployment is also creeping up. So how do you want to stimulate? Do you want to put on hold? So all of these factors. So your trader needs to be, because he's trying to, or she's trying to determine what the market is going to take on board. I mean, you've got Crown Prince Mohammed bin Salman, MBS, is going to be, I understand, in Washington this week with the president, Donald Trump. So they're the two biggest trading, that and Russia. The three of them are the monsters in the room, aren't they?
Yeah. No, I think that's a big market thing to watch. So I think key point you're mentioning is there's a lot to watch in the markets,
yes.
Right? What kind of, I would say tools or data providers or methods somebody needs to build early in their careers or in their jobs that they are become very solid analysts or solid traders. Any tools, any techniques?
You've got to drop the emotion. You've got to drop the emotion.
Okay. Don't mix the feelings.
Don't mix the feelings. Mm-hmm. You've got to be, if you're trading with your own funds, and that's easier said than done, you've got to be relaxed. You've got to be in wonderful health. You can't trade with anxiety and you can't trade with depression. You have to be focused on what's going on now.
Mm-hmm.
And there are going to be times that your viewpoint may not be correct. And that wonderful statement, don't marry a trade. You've got skin in the game. You think something's going to happen. You've set everything up. And unfortunately, it didn't happen.
Mm-hmm.
And there's a point in time to cut the trade. And there's a point in time to sometimes take that deep breath. If you're trading yourself as a profession, and I'm saying you can be a prop trader, or you can be, you're working for a company, or you're trading with your own funds. There's a big difference if you're trading with your own funds. You've got significant skin in the game.
Mm-hmm.
And so you need to be, don't look for too much blue sky. Don't get carried away by chasing something. As they used to say, little fish are sweet.
Mm-hmm.
So don't get,
Karen.
And I heard this on radio, one of Australia's top stockbrokers. This is going back about 30 years ago. It was Renee Rivkin. He's passed away. But he said, you never go broke taking a profit. I've never forgotten that line. And that's a very important comment.
You never
go broke taking a profit.
Okay.
So you can get to a point in trading, Mukesh, that, the market, you might be long oil, and oil's gone from 58 to 60. Now, you either bank the $2 profit, or you say, well, I think I'm going to, I think it might go to 65. Well, it might go to 65, but it might go back to 59 or 58 very quickly.
Take the profit.
Never go broke taking a profit. Mm-hmm. And I think one needs to relax. One needs to be very, very at peace when they're trading and making valued decisions. Don't make it with anxiety. Don't make it as you're tired or your resting pulse is at 90 or 100. You want to be relaxed. You've got to be able to keep a very clear mind.
And I think you speak from a lot of experience, Peter, because I think this probably is not talked often, what you're just mentioning.
No,
and this is
not.
Probably probably
It's
the most
invaluable.
important skill one needs to build is to stay calm and stay focused versus being overwhelmed by data, by numbers, by a lot of things. I know.
Can I add something on?
Yeah, sure.
You know what? When I set a trade up, when you set a trade up, it's important for your risk management process to write down the reasoning why I'm going to make this decision. So I
Write down. Okay.
Absolutely. So I want to write down a series of the reasons why I'm going long crude. And I see a breakout, or I see an opportunity, or I see some fundamental news, but I don't want to have one point. I want to have 5 or 6 key drivers that I can look back and reflect on. And then before I make the trade, what am I trying to achieve? Am I turning to happiness, or am I turning to avoidance? Where am I positioning? What do I want to do? We'll use an example, crude 60. It's WTI. It's a January contract. I'm long. Mm-hmm. I've made the point. I've written 5 or 6 points down. And I'll get into the other side of it in a second. I've written the 6 points down. What am I trying to achieve? Because I've written the points down. Now the next part is, what am I trying to achieve? Am I trying to achieve $61? Because it's currently at 60 and I want it to go up in value, long, I'm bullish. Mm-hmm. At $61, do I take profit? What am I wanting? Because I need to make a point that, yes, I need to congratulate myself. See, when you live...
So you're saying, before you start, you're very clear whether it's 61 or 62. Yeah.
I want to know when I'm getting out. I want to know then that I congratulate myself. I have my own party for me.
Okay.
Because it's a lonely life being a trader.
Yeah.
That's why trading forums, that's why people talk, because it can be very lonely. They're sitting in a room by themselves 24/7 making decisions, no one to share it with. And I want to see what my resting pulse was. I want to see whether I'm, anxiety, or my pulse is at 90 and it should be at 55 or 60 if I'm sitting still and relaxing. Am I running adrenaline? See, there are so many components to this.
To watch for.
Yeah, I want to see what my resting heart rate is, and I want to give myself an exit to say, yep, this week I would really like to pick up $2 in the oil market, and if I do that by Tuesday afternoon, I may, the old story, get the banana chair out and go to the beach for the rest of the week because I've fulfilled my obligation. Because my obligation on Monday morning was to get a profit. And I didn't want to be greedy. I wanted to choose $2. And you get where I'm at?
No, I think clarity of your strategy and be very deliberate about what you're doing, and not just watch the market, but watch your own markers about your health, about your mental focus and other things. I think that's topic probably which doesn't get talked around. So I think thanks, Peter, for really, bringing this message out.
And that's if you're working for any company. Let alone if you're risking your own or your family's money.
Then is even more important.
Oh, absolutely. Don't get greedy. And love yourself first. Mm-hmm. Because what can happen? The market goes against you. And if you're trading by yourself, it's a lonely life. You can actually get some self-hatred. You don't want the self-hatred. You want self-love. And no one is infallible. And not every trade makes money. You don't marry a trade. You've got your stop losses. You've got your issues. You're entering the market with a clearly defined scope of work. And you need to celebrate a win. And if you only got $1.20 of profit this week, and you wanted $2, well, it's better than getting nothing.
Yeah.
And then what you've got to do, I'll get to the next point, is you've got to have your KPIs. And your KPIs are, you've got to count how many minutes you spend a week doing this job. So if you're spending 55 or 60 hours and I'm making $400, then I've got to divide $400 by 60 hours. I'm earning less than $7 an hour. Is this a good
way?
Is this a good job? Versus if I'm spending 30 minutes and I'm earning $600, my hourly rate is $1,200 an hour. Is this a good job?
I think that's a fantastic way to look at how you're doing. I wanted to come to, because this is a risky, I think you highlighted, that's why the stakes are high. You need to be in the best shape. If somebody wants to start trading, like there are platforms like trading.com,
Yes.
and I'm sure there are others.
All our competitors.
Is there a training ground where you can
Absolutely.
actually go and practice your skill and competencies? Tell me a little bit about those.
We had, I think it was 20 languages that we had webinars daily around the world. And it may not be 20, it might be 40. I don't know exactly the number. But the huge volume of training, and that's what people need to do. They set up a demo account and they can trade on that with no money at risk.
Mm-hmm.
And they can enjoy the fundament and learn strategy, learn and identify what the breakouts are or what the opportunity that presents itself. And there are so many, industry, I'm going to say they're experts. These people do it for a living. And you can follow them and get an appreciation and realize that is, the market and how it performs.
Mm-hmm.
Because it's foreign to a lot of people, Mukesh. I mean, if you're starting to talk about a market and the way I'm talking about it, if someone hadn't traded, they'd be saying, wow, it sounds incredible, but how do I get started?
Yeah, how do I get started?
So you've got to get that demo account, which is a demonstration account. It doesn't cost any money. And more importantly, you learn the fundamentals. And then you may say, look, I've had a look at this. This ain't for me.
Mm.
Or, see, this is where I could talk to you all day. You've got contrarian traders.
Okay, what's that?
Well, the market's saying that everything's bullish and it's all going up. A contrarian trader might say, well, I believe that, but it might be all fully priced. The market may be in a perfect time to go short.
Mm.
Because these fundamentals and these, I've listened to that analyst's viewpoint, but it's overboard. It's really, I'm looking at all of the stochastics, the RSI, the moving averages. I'm looking at everything. I'm looking at the fundamentals, and they didn't know that there was an announcement coming from OPEC, or they didn't know something was happening. And I've got the scope of it. I'm across the news and I'm reading the play. And I think I'm at $60. I reckon it's going to 59, not 61.
Yeah. Okay. So you're saying that the sentiment is already overly priced in, and it might crack. No, that's a very fantastic way.
And many traders trade only short, so they don't worry about long because they realise that normally when the market's short, they're looking at 4 or 5 different key markets. So if I'm up. I wake up about 4:30 in the morning.
Yeah, tell me your day as well. I'm sure you markets don't sleep.
Oh yeah,
I'm sure you do sleep.
I sleep well. I go to bed early and I get up early, and I look at the markets. First thing I look at is the 10-year US yield.
Okay.
The government bond. Then I look at the US dollar index. Then I look at oil and gold, and I see it on the same screen. And then I look at what happened with the Dow, the Nasdaq, and this is all from Sydney. Mm-hmm. So if I assume I'm living in Sydney. I'm not living in London because Sydney, when I went, depending upon daylight savings, 4 or 5 o'clock in the morning, New York is coming to a close. Correct. Or it's the quieter. Well, I'm not saying it's quieter. That's wrong to say that. It's in a closed down phase of the day. Could be electric. Could be supercharged. But so. I don't worry. I go to bed at 8 o'clock or 8:30. The phone's off, and I need peace. I set myself up for peace and sleep very deeply, and then I wake, and I don't wake to look at a market. I just naturally wake up, and so if you're trading, Mukesh, I don't. Maybe some other people do. Some people think they can run on 3 and 4 and 5 hours sleep. This takes huge brain power to trade yourself. You need to be very rested. You need big oxygen uptake. You need to be physically fit. You need to have all of those hallmarks as far as sunshine, human connection, because it's lonely. You need to be around people. You need nutrition on point. You don't want to be sitting there and all of a sudden you're looking 2 years' time and you were 80 kilos, you walked in, now you're 105. You want to be fit. I mean, I've got traders that ride stationary push bikes looking at 5 screens.
Really?
You know, oh yeah. I mean, some people have, you know, they deck their trading room out as nearly to the point of a home gym. So they're trading there, the big screen TV, the stationary push bike riding, and they're watching their screens and they're seeing the opportunities, and they're seeing, because they realise that fitness is a big part of what they do. You need to be sharp of mind.
That's a very, very important point, and I think people get it wrong, and then they realize to get it sort of right. So I just want to change gears and ask, again, I think the purpose in my mind is always to inspire people, right? And this might, some people might find very scary as well. Yes, there is big risk, but other than the money side in trading, why would somebody want to become an analyst, become a trader? What would you say to inspire someone who is getting into university or is getting out of university?
I'll look at the first part. I'll answer it from an analyst's perspective. They have an affinity, a love affair with the markets, and they genuinely are passionate towards them, and they're genuinely intrigued and interested. So if you're intrigued and interested, you're fulfilling your passion. If you're fulfilling your passion, I would think that you're a very fulfilled person. So you're doing something that you like. So that would be, and you never know where that roadmap or that journey could take you. And we all know, I mean, you know, you're living proof of it, working for firms all over the world.
Yeah.
And that's what, you know, if you wanted to work in the oil market, I mean, you know, we go to Fujairah together. We go, you know, and we've been at different parts of the world. You know, and that's in the UAE, up from Dubai. There's a community of people that are very welcoming. So there's that part of it. And I find it a fascinating industry. I like energy and oil. But then if you're going to trade and you say, right, I'm going to trade on my own behalf, and I've got a job, I deliver bread from the bakery, and I do that from 3 o'clock in the morning. They bake the bread. I pick the bread up at 3 o'clock and I deliver that by about 8:30, 9 o'clock in the morning, all done to all the supermarkets. My job's done. So I go home. I'm using an example here, folks. And then I have a shower, relax. 10 o'clock is the open for the Australian stock market. So I may want to trade some stocks at the open. I may want to see some opportunity. I get a feel of where New York closed and what's happening across Asia. And I think that there's movement, and for the first 20 to 30 minutes, I might trade that. I might also look at what happened with gold, and I'm conscious that there's some news happening, there's some views. Gold's had a spike of $30, and it could be on a run today, where, as we know, what's happened with gold in the last couple of years is electric, and silver, platinum, palladium.
Yeah, all the metals, yeah.
All the metals. And certainly the precious. And industrial metals. You can't discount copper, you know, nearly 11,000 a metric ton traded on the LME. So all of those factors, you've got, that's how your day could be set up, that you're trading and participating in those markets because you're seeing opportunity. There could be days that you go, I've done the bread run, and it's a very unenergetic. I'm unenergetic. I didn't sleep well, so I'm not going to trade today. There's a time and a place.
So that has to be a very conscious
decision. If I've fulfilled my obligation, which was as my second job to make a certain dollar value for the week, and I've done that by Monday at 2 o'clock or Monday at 11 o'clock, just AM, then I haven't got a boss. My boss is the bread truck.
Yeah.
My boss in trading, I wanted to make $1,000. I've made the $1,000. Do I there's no, because that's what I set out to do. And I did it. I can have the rest of the week off. I can just relax and just say, I fulfilled that and go out as a champion in my own mindset. I'm not greedy. I'm not chasing too much blue sky. And I've fulfilled my obligation to me.
So I think one key point that comes in my mind hearing you, Peter, is that, yes, there are, you may not be a pure analyst or a trader, somebody else, but you can be very intellectually stimulated and you can really earn well as well. But this requires a lot of discipline. This requires a lot of discipline, a lot of competence and skill, which will probably grow over a period of time.
Yes.
Maybe if I ask you another question, Peter, what did you do to build your skills and competences along the journey? Any personal stories that come to your mind that you did this and it has served you very well?
Yes. I've probably done. I think I did my first TV interview at the end of May 2006 with Bloomberg.
Mm-hmm.
And we're nearly approaching 20 years.
Wow.
And
now you are a very regular presence on Bloomberg, CNN, CNBCs.
Yeah. And I think we're probably all up, I don't know how many, but let's say it's 3,000 interviews. So and I did one yesterday in Bloomberg Sunday out of Dubai, and I did one this morning with Ausbiz, which is Channel 7 Digital. So there it is, 2 in 2 days. So it may well be 3,000. It might be 2,000. I don't know. It might be 2,700. It might be 3,200. All I know is that there's been a lot. So I needed to make myself a subject matter expert. And I needed credentials to allow that roadmap to facilitate or to feed and to fertilize the harvest. So I went to UTS, University of Technology Sydney, and I did their executive MBA program. It was a great program. Really, it was a dynamic program, and it was really exciting. And then I went to the Wharton School in Philadelphia, University of Pennsylvania, and I did their advanced management program, which is their highest in executive education, live-in residential, global cohort, mind-blowing. And I paid for that myself. And in today's dollars, that's 120,000 Australian dollars for 5 weeks. So you've got...
invest in yourself.
Invest it. And I remember Bernie Lowe. And Bernie was the anchor at Bloomberg in around about 2008, 2009 in Hong Kong. Bernie was one of the best. He really, I used to love talking to him. And he was so dynamic, Mukesh. You've done a lot of TV. I would ask him questions live while I'm watching him from Sydney, and I'd type a message to him. He would be asking have a guest there, and he'd say, "What do you want me to ask him?" And I'd send through, "Oh, well, what about this, this, and this?" And just and that is just, he was just so matter of fact and so brilliant as a communicator. And his energy was just, off the charts.
Yeah.
And that's what it is, you don't know where this role can take you. I didn't set out. I started a firm in 03 or 04. And we had an Australian financial services license. We were, retail, derivatives. I didn't set out to be a commentator in the media. That wasn't my role. I didn't set that. That wasn't on the roadmap. That wasn't on the agenda. That wasn't on the menu. The menu was, I've got a business. And when that's why I applaud people that put their time and energy into getting knowledge. And once you've got the knowledge, you don't know where it can take you.
So build subject matter expertise.
Exactly.
Deep skills.
Yes.
Of course, balanced by keeping, you always point out on the health side of the equation.
Yes.
Fantastic conversation. I think we talked a lot about, Peter, different topics. I won't let you go before asking this question. 3 things about the markets ahead. global or Australia?
I'll go global.
You choose. What should be the analyst or the market watchers need to be watching or thinking about? What three things come to your mind?
Fed policy
Fed
is
policy.
one, and I'll answer that because it's a little bit to it. We're at a very dynamic time with Fed policy because the Fed chair his role could be over by Christmas, but certainly I believe his tenure expires in May of next year.
Yeah.
And I've heard from the administration, I mean, public knowledge, that he could be gone by Christmas.
Okay.
So what does that look, smell, and taste like? So there's the first one. Then we're looking at why, and I use critical thinking, why has gold, which doesn't pay a dividend, had such a massive run-up, which is just unheralded, in the last 2 years? And to give you an example, October the 7th, because I remember that date distinctly, it was $1,807 in 2023. That's when Israel had the attack. 1,807. Well, it was recently at nearly 4,400 in a 2-year window. So where does it go from here?
Yeah.
And I think it goes a lot further, but that's another subject altogether. So I'm conscious I'll say that that's all wrapped up in the Fed. I'm curious to see where US dollar goes. I'm curious to see what happens with stock markets at all-time highs. The acceleration that we saw on the Nikkei from 40,000 to 50,000 was like a runaway train. It was just incredible. So I want to see what's happening with the Japanese market, and that gives me a good flavour across Asia. And then I want to see, I think from a crypto perspective, I'm curious to see where Bitcoin and XRP roll. Bitcoin's back at 93, well down from its peak. And I think that what we saw in 25, President Trump has got some, and I'm using his words and certainly his two lieutenants, or if you want, they might be generals, Treasury Secretary Scott Bessent, and Commerce Secretary Howard Lutnick. They've got some very big agendas with tariffs and external revenue and what that represents to the United States. So I'm fascinated to see how that plays out. So I think
there's a big Supreme Court discussions and still playing out.
And that's, we can't say, well, we've got the end game of that now, because we're not. We need to look back in 6 months' time or this time next year and see what the revenue was earned and how successful it was. Because I've seen what Section 232 is, that even if the Supreme Court rule against President Trump, Section 232 allows President Trump to introduce tariffs.
Yeah, that's what I heard from some other commentators, that there will be other ways to continue the agenda, because this is a big agenda.
A huge agenda. So I want to see how that plays out into 26. And I think 26 could be a very dynamic year. Mind-blowing.
Mind-blowing. Okay. So Fed, how tariffs play out.
Gold.
And
the energy market, I want to see what happens as far as where does US play from that drill baby drill mantra, which I think is going to be more supply coming on, which could impact price.
And there is a lot of talk around in the market of a big emerging surplus and a glut. Everybody talks around it, and the news reacts to it quite often. And then there comes a bullish news from a geopolitical risk. So Peter, I think fascinating discussion, lots to think about, but we live in the age of AI.
Sure.
How do you see trading commodity markets in Australia, in your business, changing with the impact of AI? Is it helping? Is it hindering? And what do you say to the emerging analysts and traders?
I think from a trading perspective, they've got to look at the AI as a vehicle that they could embed in their decision-making processes. They can also see whether, and again, how successful that has been to help them achieve success. because there's only one. With trading, is very simple. You either did make money
Okay.
or
yeah.
you didn't make money.
Yeah.
So then you've got to evaluate, and you can do your own analysis on that. You can say, well, I'm using AI for a decision or for some input into making that decision.
Oh, that's a very important point. Whether it's
100%.
for an input or a decision.
And then you've got to scorecard it and say, yes, I'm blown away. 9 trades out of 10, AI it does extremely well. If that's the number, then that's wonderful. But if I get 1 out of 10, then AI is going in the rubbish bin.
Yeah.
You get me? Because there is nothing more definite, and the success or failure of a trader comes down to their bank balance. Everything else is noise.
And what I also feel that AI may amplify the noise, because AI recycles what's already being talked about in the market. So maybe another point to explore with you is original thinking, right? Any things you can share? How do you build your original thinking in noise, in AI? How do you? This is really your thought process.
Well, you've got to look at the markets. You've got to have, what are you trying to achieve today? And so we've identified what we're trying to achieve, and that is profit, and how much. Then what do I need to do to get to that? I need to study. If I want to be long oil, it's no good be looking at soybeans or copper. I need to look at the oil market. I need to understand, right, I've got to look at that. Now, what's happening? Okay, they're the inputs. That's what I think is going to happen. It seems to be in a bullish trend at the moment. I want to profit from it rising in market or rising in price, and that's what I'm trying to do. I've set up my screen. I'm using my technical indicators. I'm using the fundamentals, and I'm trying to, maximize return on investment.
So indeed, I think these are some of the key points to watch ahead.
Yes.
Well, thank you, Peter. Fantastic conversations.
Thanks for the
excellent.
invitation.
Pleasure to always talk to you, and look forward to doing more.
Look forward to it, Mukesh. Thank you.
So you heard it all from Peter. First and foremost, I think he mentioned a lot health, right? Trading, commodity markets involves a lot of risk. Commodity markets has a lot of big prize as well, but then there is the health side, being focused, being sharp. I think that's very important. You also heard from Peter the 3 things to watch ahead from Fed, on the gold side, on the oil side, and certainly there are big shifts, and 2026 will be a very dynamic year, no less than 2025. So really fascinating conversation. I hope you found some nuggets to build on yourself, to get some skills, get some competencies going, and explore the energy markets. Thank you, and this is Mukesh Sahdev from XAnalysts. Stay with us. Thank you.
XAnalysts. Empowering analysts, transforming markets.